Okay. All right. I'm going to show you, and welcome to my world, yum, and why fundamentals don't work and why charting does. Okay. The other night, Cramer was talking about yum, and he was making fun of my charting. Okay. Here's what he had to say.
Are too good for it to stay down for long. Here's the bottom line. Yum Brands looks great if you care about the numbers and the fundamentals, which I care about. But if you follow the chart, okay, Bensinger says this stock's exhausted and it's going lower, maybe much lower. And the stock could get a real haircut, if not a beheading. That said, I think Yum's business is strong enough that it's worth the risk. The way I see it, the stock's headed higher, not lower. And the chartists will soon be mum, if not dumb, about Yum.
All right. Let's take Cramer. Here it is. He was dead wrong. There is the down movement on, and it's still going lower. Look at this. Now, so we shorted Yum, and he went long Yum. So what was his problem? Well, he is correct about the fundamentals of Yum. He's absolutely correct. In fact, let me show you, let me listen to this clip here. This guy called in supporting Jim.
But these people ahead of you are all buying buckets.
All right, okay, that's good. Now, maybe we get to like a little question Rooney McFaddy thing going.
Maybe you could check it out tomorrow and try I'm a breast guy, and I'm a wingman, if you know what I mean. And I didn't try the other stuff, but this stuff was...
All right, well, that's...
One other thing, Jim, he said it was women buying the chicken.
All right, that's a fabulous update, but...
All right, so that's the kind of idiots he's got following him. These are pure fundamentalists. Fundamentals don't mean anything. Fundamentals only tells you why something should happen, but it doesn't tell you when it's going to happen. And that's the beautiful thing about charting. So even though Cramer was right about why Yum is a good stock, he didn't know how to time it. He didn't know how to execute. And execution is what this is all about. So let's take a look. We knew to take the opposite side of his trade. We knew to go ahead and short. How did we know to short Yum when he said to buy Yum? Well, first of all, you have sell signals on a chart. And he was making fun of a chart. I think Jim should go to charting, okay? Matter of fact, he did once and he screwed it up. I watched him one night and the stock went down. Anyways, there it is. That's what we call a crossover. That is called a crossover. See that where the red line crossed that white line? That's a sell signal. Let's see if it was correct. Yes, it was. But what did Jim say? Jim said to buy. So you see, he was right about why to buy Kentucky Fried Chicken. Has great chicken. But he was wrong about when to buy because he wasn't following the institutional money. Institutions were taking their money out instead of putting their money in. So you can see that's a problem. So we also have another sell signal. You see this big volume? The green bars are volume bars. The red are also volume, but green means they're buying, red means they're selling, okay? When you get a big spike in buying volume, we call that a stop sign or a warning, danger ahead. That means that volume is going to start decelerating, and sure enough, let's take a look. Instead of volume increasing, volume decreased. Wow, did it. And there's your sell signal. So we knew using charting to sell Yum. We also have another chart that tells you when to sell. This is called the X1 that I developed. Let's take a look at it. We'll put on Yum. You see, when Jim said to buy it at 35, my chart gave a sell signal. Let's take a look. There it is. See that? It tells you when to sell. Look at that. It tells you exactly where to sell. With my chart, the chart will tell you in advance where the institutions the big guys, the highest probability of at what point are they going to stop buying. So when the stock was at 35, it pointed out on the chart right here. See, when it was when it was at 32, or let's use 33. When it was at 33, it told us they were going to get out at 35. Where did they get out? That's right at 35. So you see? So you see, charting does work. Cramer is an idiot, okay? And Cramer, again, you don't know why he's telling people to buy. Was he trying to get out of the stock himself? Well, Jon Stewart kind of identified what kind of guy Cramer was, and we've seen his videos, so we never know what he's thinking. So that's why anytime you get advice from Cramer, always go to a chart. At least a chart tells you what's going on. I don't think I'd want to trust Cramer, okay? But that's up to you. All right? Okay, now I'm going to give you one more last warning with Yum where you could really get hurt. This is free. This is another chart. This is called a weekly chart. The one I gave you was a daily. This one's weekly. What's the difference? This works in 3-month intervals, meaning when it says to buy, it usually goes up for 3 months. And when it says to sell, it means it projects it's going to go down for 3 months. It's never wrong. Let's take a look. You see where it crossed over? Right here, that was a sell signal. There was your sell signal right here. And look at this. Right on the money. Then see where it crossed over right here? That was a buy signal right here. Look at that. Now we're getting a sell signal. So if you're a long-term buy and hold investor, I think I would trust the charts before I trust Cramer. This chart is always right. Cramer is seldom right. So that is a weekly chart. Again, the difference, this tells you looking forward 3 months, what's going to happen in 3 months. So this is projecting out 3 months that Yum is going to go lower. This chart projects in 2 weeks. So 2 weeks from the bottom to the top, 2 weeks from the top to the bottom. This is 3 months from the bottom to the top, 3 months from the top to the bottom. Okay? Why don't you learn more about charting and join the gang, Phil's gang. There you have it. That's why Cramer was wrong and we were right. But if you think about it, we were both right. But the difference is my chart, I knew when to execute, and Jim did not know when. And that's why he's losing money on the trade. And I'm making money on the trade by shorting it. If you're thinking of staying in Yum for buy and hold for a long period of time because the chicken's good, I wouldn't lick my fingers. Not on this one. There you go. See you on the charts.